Okay, friends. So today we are going to discuss a very interesting trading strategy that is called Golden Cross. Very interesting information, technical analyst guide, the strategy to follow for stock picking. This is a strategy which I follow normally for stock picking, stock market investing, and simple steps, moving averages trading strategy. This is one of the best moving average trading strategies. So let's look into it. Now, technical analysis involve the use of statistical analysis to manage to make trading decisions. Technical analysts use a ton of data, often in form of chart, to analyze stocks and markets. At times, trend lines on these chart curves and cross in ways that forms shapes, often given the funny names like cup and holder, head and shoulders, and double top. Technical traders learn to recognize these common patterns, and they might portend for future performance of a stock or market. So this is how they use this particular patterns. A golden cross and a dead cross are exactly opposite to each other. A golden cross indicates a long-term bull market going forward, while a dead cross signals a long-term bear market. Both refer to the solid confirmation of a long-term trend by the occurrence of a short-term moving average crossing over a major long-term moving average. Okay, let's understand this in a better way. So a golden cross occurs when a short-term moving average crosses over a major long-term moving average to the upside and is interpreted by analysts and traders as signaling a definitive upward turn in a market. Basically, the short-term average trends up faster than the long-term average until they cross. So these are the three stages of a golden cross. A downtrend that eventually ends as selling is depleted. Normally, that is the end of the selling. The second stage where the shorter moving averages cross through the longer moving averages. So you must have seen when the 15-day moving average crosses the 200-day moving averages. Okay. Finally, the continuing uptrend, hopefully leading to high prices. So once it breaks out, it goes higher and higher and higher. The golden cross suggests a long-term bull market going forward, while a death cross suggests a long-term bear market. Either crossover is considered more significant when accompanied by high trading volume. So when the crossovers are supported by volumes, it gives a double confirmation on the trend. So this is basically the pictorial, the chart representation of the golden cross. Okay, now this is the golden cross. The 50-day moving averages is crossing the 200-day moving averages. Now you need to check upon the volume for the double confirmation on the trend. Okay, at times it can give a fake crossover, and at times it gives a very nice golden crossover. Yeah. Death cross is conversely a similar downside moving average crossover. Consider death cross. Okay, normally death cross gives the downtrend. Is understand to give signal decisive downtrend in the market. Okay, the death cross occurs when a short-term average trends down and crosses the long-term average, basically going in opposite of the golden cross. Okay, that is what we said. It is opposite of the golden cross. The death cross preceded the economic downturns in 1929, 1938, 1974, and 2008. So this is how this was the early signal given in 1929, 1938, 1974, and 2008. Death cross. Okay, and there were many times when death cross appeared, such as in the summer of 2016 when it proved to be a false indicator. Okay, that is what sometimes it does give fake signals. You need to judge that based on your experience. There is some variations of opinion as to precisely what constitutes this meaningful moving average crossover. Some analysts define it as a crossover of 100-day moving average by a 50-day moving average. Others define it as a crossover of 20-day moving average by a 50-day moving average. It depends on how you take the crossovers, but basically it is the short-term moving averages which cross the long-term moving averages on the upward direction. Okay, hope that is very clear, and this pictorial graph, it is very clear. Now if you see this is the 200-day moving average, this is the 50-day moving average, and the 50-day moving short-term moving average crosses the 200-day moving average on the downward direction, and this is the death cross. This is what defines the direction of the stock or the markets. This is an example of Dixon Technologies where you see a golden crossover right here, and then look at the moment of the stock. It goes higher, it touches the 200-day moving average, and again it goes higher and higher and higher. It never comes back. So this is the golden crossover which took place. After that, price has never come back to those levels. Now, this is another example of Reliance Industries where the golden crossover is taken here. Okay, then again it takes support at the 200-day moving average, again a resistance here, then moves down, again goes crossover is here, then it never comes back to the original price where the crossover was done. So these are the two examples which I added up extra just to understand the concept of golden cross and the death cross. Henceforth, you can look into different charts of different companies and then look the performance of golden cross and death cross, and then decide on the direction of the stock or the chart going forward in future for any kind of stock. This is the basically trading strategy which I'm using to pick my stocks very early. So don't miss this trading strategy. Understand it's very simple. 15-day, 50-day moving average crossing the 200-day moving average. That's the golden cross. Yeah. Disclaimer, which I put up to every video, this is purely for education purpose. This is not a stock recommendation. Everyone should do their due diligence before investing. I'm merely sharing my opinion with no guarantees or gains or losses or any kind of investment, and I'm not a SEBI registered advisor or analyst. Okay, friends, because the markets are going higher, 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 no point in recommending stocks at this stage. Let us wait for a correction to pip in or pop in, then we can recommend stocks on it. Okay, so this was a video on the golden cross. Hope you like it, friends. If you have any comment, please put in to the comment box. And if you like this video, or if you want to see more videos on from myself, then you can subscribe to my channel. Thank you, friends.